I think the question I want to ask you about oil. Oil prices up higher right now. A lot of questions about what's going on in the Middle East. They did pull back a bit yesterday, but higher again this morning. What does that say about investor sentiment when it comes to Middle East risk?
Well, I think a lot of what's happening right now is all about investor sentiment. Oil is one of the factors here, but only one of them. The fact that we're not seeing aggressive movement in the oil prices, yes, we're seeing them up a little bit, but really not to the degree you might think given the level of disruption we had. That's a consistent theme that we've been seeing, which is the market is still reactive to news, but not emotionally so. A month or two ago, it was much more violent. Now it's actually a little more subtle.
But in all fairness, this is actually buy the news instead of, buy the rumor, sell the news. And also seeing some defense names higher in the pre-market. We were just showing some of the S&P pre-market leaders, RTX, Northrop Grumman, also a Halliburton. What does that say in your mind about how investors are trying to play this? Is that a defensive trade to go into these defensive defense names? I'm kind of mixing the two terms up, defensive trade and also defense stocks. But is that a defensive trade, or is that just a trade where you see a lot more upside considering all the geopolitical uncertainty?
Well, I think part of it is they came from a much lower level. So the fact that we're seeing oil stocks and defense stocks, we hadn't seen them run the way, for example, like we've seen the technology stocks. But I think this is much more of a knee-jerk reaction to the news cycle. Historically, we've seen these 1 or 2 or 1 week moves like this. They tend not to be longer-term impacts.
But in all fairness, the ITA did hit a recent all-time high, I think a couple of days ago, before this actually started. It actually hit a couple highs in the build-up to this. And we do see, the EU spending more in defense and other things like that. So you're saying this is more of a knee-jerk, more of a trade than an investment in the defense space?
Well, the last week has been. But I think in general, we've seen the trends have been, whether it's the discussion in D.C. or, as you said, the discussion broader in NATO. I think the secular trend is supportive for those stocks. But then obviously you get weeks like this where you have a little bit more knee-jerk.
All right, something else to talk about here, the XLK, the tech ETF, really dominated by mega cap tech. NVIDIA, Microsoft, and also Apple are about a third of that ETF, hit an all-time high yesterday. Some other components like IBM and Palantir hitting all-time highs. What do you make of that tech trade right now? Is that a place where you see more upside considering again, the uncertainty?
I think a lot of it is when the technical rallies happen, investors tend to gravitate towards tech. So in general, tech's been defensive as well. So in bad times, we've seen tech work. In good times, we've seen tech work. But generally, when you get through the more technical rally like we've seen over the last 2 months, you're going to need to start looking at fundamentals. And frankly, the valuations there are very extended relative to some of the value sectors and international, for example.
What about the dollar? This is more of a long-term question. Obviously, right now we're seeing some disruptions due to geopolitical uncertainty, but we've seen continued weakness in the dollar. What do you think that means for the market going forward? If it's a multinational, it's great for earnings, but if you're a small cap or more domestic-focused company, it's not as great.
Certainly, we've seen that. We've seen the small caps underperform again, frustratingly so, frankly, for those of us that are looking for that to start working. But yeah, the dollar has been actually beneficial for earnings. We've seen earnings for the S&P 500 start to stabilize expectations for 2025 and 2026. A lot of that due not only to the competitive advantage for a weaker dollar, but also the translation you get back is an automatic benefit to earnings.
Worry that the dollar might weaken to a point where it's not beneficial because the president again saying he's going to send out letters for tariffs, saying pharma tariffs are on the way. That seems to negatively impact the dollar. Are you concerned about, is there a level where the dollar can fall to where it's actually not great for earnings and not a tailwind like it has been?
I think it's much more of why the dollar is weakening than it is the dollar weakness itself. If the weakness in the dollar is because foreign governments are selling treasuries in order to support their own governments, or if it's some sort of punitive action, that certainly isn't good news. But if the dollar is weakening a little bit here, remember, we were at very elevated levels a year or so ago for the dollar. So a little bit of weakness is actually not a terrible thing for earnings, and also might be a reflection of the relative balance between domestic earnings and foreign earnings is starting to level out.